Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions. This is Market Insider TV and our opening commentary. Wednesday morning, October the 23rd. Thanks for joining us this morning as we take a look at our trading day ahead. Well, we did have some news overnight as far as the cattle market goes. We'll get to that here in a second. And maybe the market won't pay much attention to it or will largely ignore it, but it is hitting the news wires and hitting all news outlets, even on TV and national media. So it should be something that I think the market will pay attention to. Let's look first at our overnight markets here. Do want to mention I'll be on RFD TV coming up here this morning, 8:15 Central Time. We'll be on the next 3 days, the rest of this week, Wednesday, Thursday, Friday, talking about the markets. Commodity Wrap podcast this afternoon. Next Monday, RFD TV once again, so a lot of busy media appearances coming up in here. Big move out of the U.S. dollar overnight. It is sharply higher, and if you don't watch our TV segments, let's take a look at them. This is the chart of the dollar. Here's where I said the trend was broken and how we were going to have a rally. Boy, we certainly have. We are sharply higher in this dollar. It's almost a straight shot higher, and we've bounced off of support down here in the 99 range, and this overall is usually generally bearish to commodities, and we've broken uptrends in the corn, soybeans, and now the wheat. And part of this is because of the dollar surging higher. We also have the crude oil down fairly sharply this morning, over $1.20, almost 2%. Stock market is down. McDonald's leading the news, and a couple other companies having big losses in pre-market trading. Gold and silver backing off of their highs. Silver was up sharply yesterday. It's backing off. Big moves, 50-cent moves seems like just the norm for silver lately, but new highs for both gold and silver despite the strength in the dollar. And overnight, corn down fractionally, beans 3 3/4 lower, and the wheat is 6 to 7 cents weaker in here. And let's talk more about these markets. As always, go to our website, MidwestMarketSolutions.com. You can sign up for our YouTube videos, get all the videos when they're posted, that you can get those and look at those commentaries, as well as our text service and our Twitter feeds, Brian Hoops and Midwest Markets, with latest market information. So let's talk about what's happening. So weather-wise, you always want to look at weather, what's happening in the U.S. and South America, especially this time of year. Good rains continue to fall across Brazil and Argentina. That replenishes soil moisture profiles. This is very bearish for the grain markets, especially for soybeans, as they will grow a monster crop this year. Here in the U.S., weather looks mostly open. That's going to allow active harvest, and we are pushing that harvest pace nearly 75%. 2/3 of the crop is harvested, if not more, of corn and soybeans, and there is forecast for rain into the plains and the dry winter wheat belt around November 2nd. Looks like heavy rains for Kansas, Oklahoma, into Texas. Missouri will get a little bit. Nebraska will get a drink. The rains that are badly needed look to fall. Might be 4 or 5 inches at one time, but I think nobody will argue with that the ground will take that type of moisture. So forecast generally bearish for the winter wheat crop, generally bearish for corn and soybeans because of South America crop development. Technically, we're in downtrending markets. Corn made a 50% retracement yesterday at 414 3/4, I think it was. And soybeans have hit their 38% retracement. May not do much more than that. I'm looking for them to do a little bit more, but they may not because of the good weather in South America. And wheat is just starting to enter its downtrend. We talk about this in our TV segments on the closing basis when we look at chart action from the day. But we're in downtrending markets here. Corn, soybeans, and wheat. Don't be fooled or mistaken that we are in some sort of an uptrend bull market in here, because that is not the case for these grains. So November grain options, they expire the 25th. That's coming up this Friday. First notice day is Thursday, October the 31st. And November grain options is a big one, as that's a major option, and there'll be a lot of futures positions taken to offset that option expiration. In the cattle market, this week's cattle facts show list down 7,500 head, about 223,800 head. Pretty tight numbers. It gives us ideas. We're going to see 189, 190 trade. I heard from a client last night. He was looking to get 190, he thought, in the Southern Plains. But there was some negative news last night, and this may not pressure cattle as much as I fear. When we have heard bird flu talks, we sold the cattle market off before we came back. Now we have an E. coli outbreak, and that could pressure cattle this morning. Now, most cases have been reported in Colorado and Nebraska, and investigations believe it's onions rather than beef, but it is on the quarter pounders, and that's pressuring McDonald's this morning. That's where the outbreak has been linked to. One person has died, an elderly person, 49 have been hospitalized. So my fear is that they're going to sell the cattle market off of this news. Right now, the bid and ask suggest steady open in the cattle futures, which is good. Now that can change as we get closer to the opening, and we'll text out some information and recommendations there. But hopefully, we hope for the best in here, fear the worst as far as this cattle market goes today. It's a good market, very strong fundamentals. Hopefully, this news doesn't wreck the cattle market here. Iowa Southern Minnesota weekly hog weights came out this morning, 285.5 pounds, slightly up from last week, and very similar to last year, where we saw a big jump last year at this time. We're right in there, 285.5 pounds this year. So heavy weights, and that is longer term bearish for the hog market. So we're getting close to weekly resistance. If you're a producer, start to lock in against some of those, against that lean hog index. We get up in the into that area. That's the time where we want to start locking things in and doing some risk management. Low 80s would put you in line with that index and close to the weekly resistance. All right. I hope you have a good day of trade, everyone, and good luck on your trades. As always, reach out to us. We'll be glad to talk markets with you. This has been Brian Hoops. Talk to you soon.